Welcome back. We are continuing our conversation with renowned investor Dr. Mark Mobius, best-selling author of several books, including The Inflation Myth and the Wonderful World of Deflation. And Dr. Mobius is currently the co-founder of Mobius Capital Partners and is considered to be the founder of the emerging markets asset class. All right, Mark, I want to focus on emerging markets now. Now, as you mentioned, money printing hasn't been exclusive to the US. It's happening around the globe, including in emerging markets. So where do you see opportunities in emerging markets at the moment? What are your top three countries?
Right now, if you look at our portfolio in the Mobius Emerging Markets Fund, you see India is at the top, followed by Taiwan, Korea, China. And we have some investments in Turkey, in Latin America and Brazil, and in South Africa. In addition, one investment in Kenya. So we're very global. And a lot of people say, wait a minute, Turkey, isn't the Turkish lira devaluing? Sure, it is devaluing, but the companies that we own in Turkey are benefiting from the devaluation because they're exporting. Their costs are in Turkish lira, which is getting weaker, and their incomes are in US dollars. So you see, it depends on where you're sitting. In other words, what kind of investment you're making, and that will determine whether you should be investing or not.
Well, and look, there's obviously a lot of political instability and geopolitical factors with a number of the countries that you mentioned that I want to focus on. But before we get into that, how has your fund performed so far this year in this semi-post-COVID world, if you will?
So far this year, we're up 70% in dollar terms, which is very, very exciting for me.
70%.
70. So I'm a big investor in the fund, of course, so I'm very happy.
I'm sure you would be. Who wouldn't be with a 70% up year-to-date performance? Okay, so India, you said, was your biggest holding. Why India? And as we know, India has been hit particularly hard by COVID with various variants of the virus. So where do you see opportunity in India? Which sectors in particular?
Well, in India, we've invested in the healthcare sector, particularly in diagnostic area. Of course, with COVID, the need for diagnosis, for testing, all of that kind of thing for medical testing is high. So we've invested in that. And then we've invested in a pipe company that does construction materials at a very high level, a very high quality company.
Can you give us the names of these particular companies?
I don't want to give you the names because I'm afraid that I'll be accused of pushing a particular stock.
All right, never mind then.
But if you look at, if you go into the internet or into Bloomberg, you'll see the portfolio. But I don't want to recommend the stock that we're holding because we may be accused of
we'll keep the compliance people happy then. All right.
Yeah, exactly. So that area, and we're also investing in India in software because there's a great need for enterprise software, not only in India, but around the world. But in India, they're doing particularly well. So, you know, despite COVID, a lot of people forget that India's got 1 billion people, and not all of them are affected by COVID. Many of them are getting vaccinated, and it's a young population, so they're naturally more resistant to COVID. So these are the factors that really have helped India, I believe. And it's a good lesson, by the way. Look at the US market. Of course, the initial scare last year in February, March, resulted in a huge downturn in the market. But since that time, the US market has gone from strength to strength. So COVID really has not had that big an impact on the markets.
Okay, on the contrary, you could say that COVID has in fact created opportunities in certain sectors in the way that people have had to adapt to it. In the technology sector, for example, allowing for remote work and remote medical diagnostics, for example. Are there any areas that you believe have benefited from the pandemic in one way or another that you are now invested in?
Yeah, for example, in Taiwan, we've invested in the so-called fabless companies that do the software for chips, the microchips that are used in computers and all kinds of other electronic equipment. So semiconductors is a big area for us, And one of the reasons why there's actually a shortage of semiconductors is because of the growth of the internet. And for example, we're talking to each other using computers that have hundreds of chips in them, and automobiles today have a big demand for chips. So that's one area where we've invested in the software of chip design and also some of the hardware in technology. So there's a lot of opportunity in that area, particularly in Taiwan, Korea, and also China. And in China, we've invested in medical care, a company that makes the joints, metal joints for knee replacements and that sort of thing. We've invested in that area. So medical, and then the other area is education. We've invested in an education company. Also in Egypt, by the way, I forgot to mention Egypt. We have one very good company that has colleges and primary and secondary schools. A lot of people don't realize that in these emerging markets, there's a big demand for education that the governments are not able to really fulfill. So the private sector then steps in and supplies these services.
Well, you mentioned again that India was your highest weighted emerging market, and I would understand that a lot of that has to do with some of the positive reforms implemented by the Modi administration. Would that be correct?
Correct, exactly. And they're going from innovation to innovation. The government has been moving step by step. Not easy, as you know. India is really the United States of India, in the sense that these states are very different from each other, very difficult to get them together to agree. Well, you look at the U.S., you got problems in the U.S., but India is multiplied many, many times.
So, Mark, similarly to how India has been benefiting from reform from the Modi administration, you could say that China potentially has the flip side of that. When you look at recent China government interference with companies like Didi, with Alibaba, the Ant division of Alibaba in particular, and possible future interference, because that does seem to signal the trend that we're seeing from China. Does that concern you?
Not really. I'll tell you why. You must remember, with China, there are two aspects. Number one, the Communist Party does not want information about the Chinese people being leaked out to the world. Just like the U.S. is afraid of, information about the U.S. being leaked to China and other countries. So you have a company like Didi. Didi has an incredible amount of information about their Chinese consumers, which I believe probably the Chinese government is afraid of being leaked. So I think that's one of the reasons why they cracked down on Didi. The other aspect is that these, like the U.S., by the way, these large internet companies have gotten much, much too powerful. I mean, if you look at the U.S., for example, you'll see Alphabet, the WhatsApp, all these different apps are owned by really three big companies, huge companies. And unfortunately, the antitrust people in America have not really gone after these people. But in China, they are now cracking down from an antitrust point of view, because they realize that these companies like Alibaba are just too powerful, and they suppress the growth of smaller companies. So a lot of that is not just, Communist Party cracking down on the big guys, but it's more antitrust concerns that the Chinese have.
So in a way, you would advocate that the U.S. actually take a page from the Chinese government's book, at least when it comes to breaking up and regulating these giant tech companies?
Definitely. I think, you've got to crack down on these companies that are just too powerful at this stage, where, who can compete against Amazon? I ask you. It's almost impossible. And you see that in many, many other areas. You see that how free speech is being suppressed by some of these apps in America. So this has got to really be looked at very, very carefully.
So it's interesting because you're saying that on some levels, the US government can actually learn from the Chinese Communist Party, at least when it comes to curbing the power of these tech giants that you say are wielding too much influence and power themselves.
Yeah, that's right. But you must remember, the objective of the Chinese leadership is to become better than the U.S. And what they did, starting from Deng Xiaoping, they said, look, we realize that it doesn't make any difference whether the cat is black or white, as long as it catches the mouse. And they looked at America and they say, what has made America great and powerful? It's a free enterprise, a capitalist system. So the Chinese, they may not call it that, but they actually have adopted a capitalist system where there's free enterprise. And they realize that this has been very successful, but they also have got to look at the US regulatory environment. And they realize that, hey, we don't want another, the kind of scandals that you've seen in America, some Madoff made off with everybody's money because there was no proper regulation. The Chinese want to avoid that. So they're looking at America, saying, well, maybe we should look at this and do something differently. And I think it's very important to understand where China is coming from.
Well, do you have any concerns, big concerns as an investor in China from a geopolitical perspective, especially considering that you mentioned your second biggest position after India is Taiwan, and we have growing political tensions between China and Taiwan? Do you have any issues with that, or any issues with potential bigger trade restrictions on China from the US and the European countries? Because that seems to be back on the agenda from a big geopolitical perspective. What bothers you about investing in China at the moment?
Of course, those points that you just made are very, very uppermost in our minds. But I've been living with that for the last 30 years. In 1987, when I joined Templeton, I was running the Taiwan ROC Fund. So I knew a lot about this tension between China and Taiwan. And it's going, and it's a concern. There's no question. But I don't see any immediate break. I think the Chinese are taking a long view. They think from a long-term point of view, eventually they will be reunited with Taiwan. And of course, you must remember, all these countries are changing. The societies are changing. With the internet, information revolution is really creating a big transformation of the way people think. And so it's a concern. There's no question about that. But it's not going to stop us from investing in these countries.
Well, speaking of revolutions, China, of course, is trying to revolutionize its currency with a digital yuan. The Chinese, the People's Bank of China, putting forward the first central bank digital currency. Where do you see that going?
Well, the Chinese are way ahead in digitizing the currency and also digitizing payments. And I remember my last trip to China was, let's see, now it's a year and a half ago. And I was in Shenzhen in the south of China. And I was inviting my Chinese friends out for dinner. I was the oldest, so I said, I have to buy dinner. There's a tradition. And we went to the restaurant. I pulled out my credit card. They don't take credit cards. I took out my cash. They don't take cash. Then one of my colleagues took their cell phone. Bam, it was paid. That's digitization of payments. So China's way ahead of other countries in this regard. And I believe the digitization of the renminbi is just one further step in that direction to make transfers easy and cheap. So this is a big transformation that's taking place globally, not only in China, but China's way ahead of other countries.
Well, the whole idea of digital currencies, be them central bank digital currencies or cryptocurrencies, and the notion of revolutionizing traditional finance with DeFi, decentralized finance, I imagine that is going to have a huge impact on emerging markets where many people have been unbankable, if you will, haven't had access to traditional banks. Walk us through that, how you see DeFi impacting emerging markets.
Well, first of all, I think you've got to differentiate between cryptocurrency and digitized currencies. digitized currencies are backed by a real currency that you can spend in any way. Cryptocurrencies are not in that category. So I think you got to separate these two things. Now, what's happening globally is that there's a trend to make, what do you need a bank for? You need a bank to keep money safe, to perhaps hopefully pay you some interest, and to transfer money from one place to another. Now, this transfer operation is now being digitized. As you know, if you go into any emerging market country, you'll see signs of these transfer companies like Western Union. See Western Union all over the place. Recently, I was in Dubai, and my friend, who didn't have his identity card with him, wanted to help me transfer money. We went to a Western Union office. I gave them my passport. He gave them the money, and they made a transfer to another person, happened to be in, I think it was in Turkey. But you're seeing this around the world, but it's going to become much easier and less expensive. In Kenya, for example, they have a system called M-Pesa, which was started by the telephone company there, the Safaricom, which, by the way, is one of the stocks we own. But they started a system whereby with a simple cell phone, you can transfer money from one place to the other by going into a shop, giving them the cash, getting a code, sending the code to where you want to transfer the money. And on that side, they'll go to a shop with the code and collect the money. It's been an incredible, successful system. And of course, that's going to spread around the world.
And is that a sector that you're exposed to through your fund? The whole idea of decentralized finance backed by, we'll call it fiat currency, fiat digital currencies, and its impact on emerging markets. Is that a sector you're particularly bullish on?
Yes, and that's the reason why we've invested in Safaricom, because they have that M-Pesa system.
Okay, well, you mentioned Africa, and before I have to let you go, I do want to get your thoughts on South Africa, where I grew up, because you mentioned that it was somewhere in your portfolio. And clearly there's a lot of unrest at the moment in South Africa with looting and riots and protesting. Do you have any thoughts on that?
By the way, that's a very good example of where, and I was just talking to my bank. I have an account in South Africa, and my banker said, you know, we have riots here and so forth, but life goes on. But we invested in a pharmacy chain in South Africa, very well run. You may know it, Clicks.
I know Clicks very well. Shop there all the time.
I just mentioned one of our holdings, but anyway, they're very well run. They're very efficient. They're very profitable, and they survive in a difficult environment. And this is a good example of where you can often find hidden gems in areas where you would not expect to find them. And I believe they'll continue to go from strength to strength as a result of the good service and the way they run the company in a very good way. So South Africa is right on our list.
All right, so some hidden gems in South Africa, but India top of the list, followed by Taiwan, followed by China as your top 3 emerging market picks.
Yes.
And we can get all those details on your website, and particularly which stocks make up the portfolio, which, as you say, is up 70% year to date. Well, Mark, thank you so much for joining us here on Kitco News. We really appreciate it.
Thank you very much. It's a pleasure talking to you. Thanks.
Mark Mobius, the author of his new book, The Inflation Myth and the Wonderful World of Deflation. It's a great read. Appreciate it. Thank you so much for joining us on Kitco.
Bye-bye.
Thanks, bye-bye, and thank you for watching. We'll see you next time.